brought to you by the Accra Collective of the Socialist Movement of Ghana. Today we're going to be looking at the rise in the value of the cedi. Why is the cedi rising so fast? What are the factors? What impact is it going to make on the national economy and so on? So many questions to answer. And it is my biggest pleasure to welcome to the microphone Comrade Kwesi Adakwa from the Accra Collective of the Socialist Movement of Ghana. Comrade Adakwa, you're welcome.
Thank you very much, Senior. Good evening. Welcome to listeners. As we always say, Palava is brought to you by the Socialist Movement of Ghana, the Accra Collective. And we want to urge you that wherever you are in the country, there are collectives around. Find out how you can join the Socialist Movement of Ghana. And I can assure you, your desire to change society, Ghana, and the world, you will have meaning in the SMG. So today's topic is economic in nature, and the economy, as they say, affects every one of us. So over the past month, I mean, you can clearly see that we have been animated by the discussions over the cedi, how it is rising. And this discussion, I'll put it in two contexts. The exchange rate of Ghana is important because it affects our livelihoods, it affects our production, it affects our cedi, it affects everything that we do. So every ordinary person has interest in the exchange rate. But a new dimension was introduced by the former Vice President, Dr. Bawumia, and that is what stuck in people's heads. The exchange rate was not just described as one factor in the economy, but it was seen as one of the key indicators of whether the economy is doing well or not. So we all remember his aphorism. If the exchange rate is weak, the fundamentals are weak, the exchange rate will expose you. Of course, he was exposed when he was in power because the exchange rate actually fell after he went and celebrated that he unlocked the cedi. So basically, their exchange rate was placed on this pedestal in our economic discussions because, of course, everybody wants to have something to say, whether positive or negative, about the exchange rate. Now, I would like to begin by posing three questions, and I'll attempt to answer those three questions within the few moments that we have, and then that will place the exchange rate conversation in its context. The first question is, what are the causes of the appreciation of the cedi, the current appreciation of the cedi? And I will add that what are the historic causes of the depreciation? Because that's what we know. We know that the cedi depreciates all the time, but now it is appreciating. So what are the historical causes of depreciation and the current appreciation of the cedi, the rise in the value of the cedi? And then what are the effects of a weak or a rising currency? If your exchange rate is changing, whether it's rising or falling, how does it affect the economy? So we will attempt to discuss that. Then we also like to know, how could the dividends from the appreciation of the cedi be felt by the ordinary man, and how would we be able to maintain this current episode of appreciation, or even to achieve some level of stability? So the exchange rate is basically the price of forex, or the foreign exchange, and it measures the rate of one currency in respect of another currency when you are changing that currency from one to the other. Now, so basically the exchange rate is a price that you pay to change one currency to another. And forex or exchange rate is basically, in classical economy, is basically to facilitate trade between two nations or two sovereign entities. If you have your currency, I have my currency, there must be a place where we can change to be able to exchange goods and services. And we all know that the dollar is a dominant currency on the planet. So that's why whenever we are talking about exchange rate, we use the dollar as the determining currency. So the exchange rate, basically, as we have it in Ghana, plays a critical role because Ghana, by its nature, its economy, is a small open economy which is highly integrated into the global economy. So that integration means that we are always trading with external markets. Either we are importing, which we do a lot, or we are exporting. And having an exchange rate is one of the key things that we need to consider when we want to look at our economic governance. So over the past few months, it started over a month ago, but over the past few months, we have seen a massive surge in the value of the cedi. It's estimated to be 25% since the beginning of the year. But since the beginning of the month of April, we have seen that it has really, really picked up over 28%. But over the year, because beginning of the year had the dollar had risen and the cedi had lost value. Now, this exchange rate appreciation of the cedi and the massive surge, people are asking, so what caused that surge? The first thing that we would like to talk about is the massive rise in commodity prices. These are some of the external and also partly internal or exogenous causes. For the past 3 years, cocoa prices have risen to as much as $10,000 per the metric ton. And this rise is unprecedented. So it means that every metric ton of gold, we are getting a lot more than we usually get. At the same time, gold has also risen in value greatly. And that rise in the gold prices, it's now at an all-time high of over $3,250 per the ounce. And this kind of gold, rising gold gold and cocoa has brought in forex. Now, the gold is a new story that is developing. And the new story is that we have seen a massive surge in the production of gold from Ghana. And that surge is driven largely by the artisanal mining, what some people will mistakenly call galamsey. But artisanal mining is not necessarily galamsey, even though people who engage in it may flout the rules. So this surge in the gold mining has given us enough gold for us to trade. And that gold is responsible for the surge in the production volumes, and the price is responsible for a high level of forex coming in. At the same time, we are also seeing that the volumes are unprecedented, and Ghana has been able to build up its gold reserves, which is backing the currency. So the gold and the cocoa are actually propping up our currency as we speak. And the second one is exogenous, external, is the trade war that Trump has stirred up across the world. Now, trade volumes have dropped between many of the big nations, and this has effects on the demand for forex across the world, and also it has also resulted in the lack of trust in the US dollar because of the erratic economic governance, and the US dollar itself has lost value. So that value loss has translated into a gain for our cedi. But that is part of the explanation. Another thing that we can use to explain what is happening is that when Trump is doing all these uncertain moves on the global market, it has resulted in the loss of confidence in the U.S. Monetary and financial system. Indeed, for over the past few weeks, we have seen that some sovereign countries that have invested in U.S. treasuries, they have divested themselves of their interest in U.S. treasuries, and they are reducing their interest in their holding of U.S. bonds. And this has led to a lower confidence in the dollar, also adding to the fall in the value of the dollar. Now, we also have a situation where the U.S. itself has suffered a downgrade in terms of its bond rating. And from AAA plus, they are now AA. And this is something that is unprecedented, that is really creating a lot of uncertainty in the global economic system. There's one other thing too, which is related to the gold story, but this is the gold board, which has been set up recently. The gold board, by its nature, is set up such that the country Ghana, the sovereign Ghana, can take charge of gold trading internally and externally, and ensure that all the receipts of gold are repatriated into the country in a short period of time to support our forex needs, because we are an open economy, we import. So the gold board is ensuring that. But even before the gold board was created, there was a direct government policy to ensure that gold proceeds are repatriated back to the country. Now there's a body for it, and there's a law for it that is making it even more certain. And this has also resulted in, and the gold board also resulted in, the complete ban on foreigners trading gold locally. So that is also very significant. And that was linked to the smuggling of gold. In fact, between 2022 and 2024, every year over 60 tons of gold were smuggled, and 60 tons times the value of the gold, in some years it was $2 billion, in some years it was $4 billion. Now this has reduced, and all that money is coming back into the economy. Then we also have the situation where the Bank of Ghana has a program for auctions of forex. And the auction of forex, so far we are told that over $490 million have been auctioned, so that people who are importing, especially those who are importing oil, can import fuel and oil into the economy. And this is making the system very easy for those looking for forex. And the government has itself shown that it has the appetite and the means to back the cedi through the auctions. So this is one of the other factors. And then also you can see by the fiscal and monetary policies, fiscal policy by way of the government reducing its expenditure, signaling that they are not going to borrow and overspend and be irresponsible like we used to see, where we were even declared bankrupt. We had to default on our debt. These are confidence building measures in the monetary and fiscal policies that are supporting the gold situation. And then so generally it has brought general confidence into the economy. And this confidence has led to a virtuous cycle for the economy, but of course not for those who are holding dollars. Now everybody holding dollar is trying to offload the dollar. So it's creating pressure for those who are holding the dollars. So people are no longer holding dollars. People are rather offloading their dollars. And this is the kind of confidence that will bring the stability of the cedi in the short to medium term. So the next question that we want to ask ourselves is that when your currency falls or appreciates, how does it affect the economy? I would say generally everything about the cedi appreciating is positive. I say this because who are we to say that the actual value of the cedi which was 15, 16, 17, was that the actual value of the cedi? Should that have been the actual value of the cedi? Why are we not saying that the actual value of the cedi should be lower than should be higher than the 15 cedi or the 16 cedi that we used to have. And I'll say that because of the poor management of the economy previously, now the new level of confidence we are seeing says that maybe this is a period of correction aided by the exogenous and the internal factors. And there's nothing that says that if the cedi comes to 10 cedi as its actual value at this point in time, there's nothing wrong with that. So generally, when the cedi rises or it gains strength, it passes through the economy. And that's what we are witnessing. For the very first time, something significant happened. The GUTA, Ghana Union of Trade Association, actually called for a reduction in prices from their members under an NDC government. That is very significant. And I can tell you that that is something that we couldn't have seen, but because of the confidence that we are witnessing, this is happening. There's a theory that says that when your currency rises, your exports suffer. I take a different view, because when you take the economy of Ghana, because we are an open economy, almost every part of the economy has an imported aspect. So if you take agriculture, the inputs, the fertilizer, even seeds, and the machinery that we use are imported. So if you import your capital goods and intermediary goods, a fall in the cedi is not necessarily, a rise in the cedi is not necessarily a non-competitive advantage for you. It may even help you to become more competitive. The same way with other sectors. So the gold and other places where we use machines, chemicals, which are all imported. A fall in the dollar is good for those productivity that we are talking about. And then we are also seeing that most of the merchants and the traders are experiencing, I know friends who are now clearing goods from the ports. They didn't get money last week. Now this week, they are paying less than 30% of the previous value that they used to pay, because the value has fallen. So all in all, the fall of the dollar or the rise of the cedi is good for our economy. I will just jump and ask one last question. Will it last? Of course, it's not guaranteed to last, because these are all very dynamic factors that if you don't manage it well, it will not last. But to make it last, we need to institute policies like having structural transformation, so that our economy doesn't become heavily dependent on imports, but we become export-oriented. We become more productive, not just consumption. And then also we have medium to long-term planning on how we can support our economy to deliver a stronger currency or a stable currency over time. And then we also need to have economic sovereignty, so that our gold that and cocoa that is supporting the cedi today, we will have better control over those resources, so that whenever we are having crisis in our currency, we can use it to support our currency. And there are many other things, but I'll end here because of time constraints, so that others can bring their views on that. Thank
you. Well, we had Comrade Kwesi Adakwa of the Socialist Movement of Ghana, Accra Collective, explain to us why the cedi is rising and its consequences on the national economy. We don't have a lot of time, so we're going to take some very brief interventions from the audience here and move very quickly to the social media platforms to take a few suggestions, and then Comrade Adakwa would have 1.5 minutes to round up. So I'd like to see by hand those who have contributions to make questions to us. Please show by hand. We don't have a lot of time. Let's rush it. I see one hand. Is that the only hand I see? I see two hands. But please be brief. We start from you and we end with you at the back. Please, very quickly.
Good evening, comrades. What I want to talk about is about just a little, thing to add to what Prof told us. Now we've seen in our economy, the cedi is appreciating. but does it come low to our economy? Example, we go out to buy kenke, we buy it 7 cedi, and up to date, when you go out to buy kenke, the price is still the same. It has not changed. So if our city is appreciating, how or what measures or policies can we, put together so that we can see that it's actually affecting our economy and see it in our the pricing of our commodity.
I think our presenter. Okay. I think he gave us the framework. I mean, if all of a sudden you were buying something around 15 cedi, or you needed 15 cedi to get $1, and today you need about 10 point something to get it, there is cause to be happy and celebrate. I think that is obvious. Except that just as he landed, I mean, we need to approach it with caution. With caution in a sense that the celebration could be premature, especially because he made mention that the structure of the economy has not changed. So if the structure of the Ghanaian economy has not changed, and all of a sudden something 15 to 10, I mean, you should worry that tomorrow it can escalate from the 10 to even more than the 15. Then again, Dr. Bawumia, when he made the point, I mean, that when the fundamentals are weak, the exchange rate will expose you. That is obvious. That statement is very valid, whether it's made by Dr. Bawumia or any other person. The other thing that, or what Dr. Bawumia did not take time to explain, is what constitutes the fundamentals. Because it's very true that any time the fundamentals of any economy is weak, the exchange rate is something that will show that. But what are the fundamentals? One is the trade volumes. Two is your primary balance. Three is the debt, the structure of your debt. So if you look at the Ghanaian economy, over the years, our trade balance has been deficit. So when you are importing more than you export, then definitely you always need more foreign currency to set off. The second thing is that when your primary balance is always deficit, which is your expenditure is always more than your revenue, like Ghanaian government, the taxes that the government gets is always lower than the government expenditure. So you ask yourself, where is the government going to get the surplus to cater for the administration? So the government will then have to go and borrow. So one is the trade balance, two is your primary balance, and three, the structure of your debt. So if you look at the Ghanaian debt, the government borrow more from outside than from within the country. If you are borrowing more from outside, you need the foreign currency to pay the one who has given you the money. And secondly, if you are borrowing outside, you either borrow from institutions or you borrow from the individuals. The government borrow much from the individuals and not from institutions like IMF, World Bank, and other structured institutions. Said that when you borrow more from those institutions, yes, you need dollar to pay them, but the interest rate will be lower than when you borrow from the investor community. So I'm just siding with our presenter. We have a cause to be happy and to celebrate, but we have to be cautious because the structure of the economy has not changed. Isn't it also surprising that it's the dollar which we are experiencing this? What about the other currencies? I think if you take a look at the other currencies, it will give you a clue whether, the celebration is too early or we should approach it with caution. Because if the dollar is depreciating, the other ones should also be depreciating. Otherwise, it tells you that we should approach it with caution. But because of time,
Well, we'll now ask Comrade Johnson to come with the social media messages, and he has 3.5 minutes.
Good evening, viewers. I'll be reading a few messages from our social media handles. That's WhatsApp and WhatsApp. So this is from Kwame Asare. So he says, the appreciation of the cedi is a welcome relief for many working class families. It shows that with the right monetary policies and controls, the state can play a meaningful role in stabilizing the economy. However, sustainability will require moving beyond imports and investing in local production. A strong currency must reflect a strong productive economy. We must now turn this into an opportunity to grow Ghana from within. That's once again from Asare Kwame. This from Emmanuel Ansa. He says, Cedi appreciation must not be an end in itself, but a means to improve the lives of the working class. A stable currency should empower the state to invest in public healthcare, education, and housing sectors that directly benefits the masses. True sustainability lies in reducing dependence on imports and building domestic production under public ownership. We must use this opportunity to demand structural change that favors workers, not speculators. Otherwise, these gains will remain superficial and temporary. This from Edem Question East Legon. It says, Wednesday Palaver is the biggest anti-neoliberal show in Ghana. Special thanks to the Socialist Movement of Ghana and Pan-African Television. Everywhere that our comment uttered was guided by a progressive framework rooted in Marxism, socialism, and Pan-Africanism. We spend our local currency, cedis, in our country, and we have the capability to print it ourselves. However, when it comes to funding developmental projects, we often find ourselves borrowing from external sources that control the dollar. This dynamic creates an imbalance as the value of our currency can be manipulated, making it cheaper for others to acquire our raw materials while increasing our debt burden in dollars. This situation suggests a deliberate strategy to devalue our currency and undermine our economic sovereignty. To counter this, we need to develop an anti-neoliberal framework that aligns with Nkrumah's vision for development, prioritizing socialism and self-determination. By nationalizing our resources and reducing the influence of multinational corporations, we can reclaim control over our economy. It's essential for socialists, Pan-Africanists, social democrats, and like-minded individuals to put aside their differences and find common grounds to forge a better future. Our enemy is united. Therefore, our unity is crucial in this struggle. The AES model offers valuable lessons and we can learn from its approach. Ultimately, we need to transcend the limitations of the current two-party system masquerading as a multi-party system which often prioritizes tribal, religious, and party divisions over the common good. By embracing scientific socialism and a Pan-African perspective, we can build a more just and equitable society. As the reggae artist Kwacha so eloquently puts it, we must strive to create a righteous world, one that fights against war, crime, and injustice, and instead build a brighter future for all. Who or what can help us rise above our differences and forge a better future for ourselves, and how would this be achieved? I think that's the last one of the question for our lead discussion. So I'll take one more and I'll be done. Sorry. This is from Kwekubedi. He says, this so-called appreciation of the cedi is artificial. It's mostly due to short-term interventions and not real economic growth. As soon as the interventions stop, the currency will collapse again. We've seen this movie before. We need deeper structural reforms, not temporary fixes. Thank you very much, viewers.
Now my pleasure to invite Comrade Kwesi Adakwa of the Accra Collective of the Socialist Movement of Ghana to give us his closing remarks in 1.5 minutes.
Thank you very much, Senior. I'll take less than 1.5 minutes. They say something in economics, prices are upwardly mobile and downwardly sticky. So whenever some things go down, up in the prices, they go up quick. But when they are coming down, they are slow to come down. I think the signals are very good. There's generally a good feeling about the way the economy is being managed. Generally, of course, we haven't even gone anywhere yet. The key issues of unemployment and low productivity, low incomes, a lot of infrastructure deficits, general lack of development still persists. So we haven't gone anywhere. But this is a good step. And it's a good step because in addition to the cedi rising, other fundamentals of the economy, the inflation, are all also looking promising. Even though I'm disappointed that the MPC, the Monetary Policy Committee, maintained the policy rate at 28%, which is anti-production. But we all know that they are using the inflation targeting framework. And we hope that the lessons that they will learn is that they will change from the inflation targeting to the dual mandate, which is inflation targeting and full employment. This is something that is needed so that they will not just say we are targeting inflation. So generally, the transmission mechanism between the exchange rate and the price of kinky is slow and long. So for us to feel that, it has to persist. It has to be stable before you can feel that. And Ghanaian traders and business people have a long, even decades-long history of high inflation. So they have this mental block of reducing prices because they think that the moment they reduce prices, it will go up again. So the government must show that people can trust in their management of the economy. And that is where we will see the benefits. And that is where the benefits will persist and the CD will have a real stable rate. Thank you.
Well, as they say, all too soon, we've come to the end of a very exciting and educative, program sponsored by the Accra Collective of the Socialist Movement of Ghana. I would like to say a very big thank you to Comrade Kwesi Adakwa for coming to help us educate ourselves and to discuss this very important issue. We'd like to thank all of you who switched on your televisions and kept it on Pan-African television during this program. The program has meaning because you watch it. The program has meaning because you send us text messages, because you engage us on social media. For those of you who engage us on social media, wherever you are, in your cars, in your offices, on the road, everywhere, we'd like to say a very big thank you to you. And we'd like to assure you that this program is your program, it's our program. It's a program for everybody dedicated to understanding the complicated issues of our time and contributing to the national development effort. Keep your dial on Pan-African television because we bring you the best in everything, best in current affairs, best in news, best in sports, just best in everything until we see you again next week. It's bye-bye from all of us, from Makiza, Latifa, the producer, from Hakim, from everybody at Pan-African television. Sawa, the director of the show, is bye-bye from all of us at Pan-African television. See you again next week. Bye-bye.